Hello friends, in our last small video we had tried to discuss that 17,600 call writing happened and accordingly we saw that a downtick or a down move was seen throughout the day and bulls never managed to conquer 17,600 mark again. Accordingly if we see that bears managed to carnage about 1.3 percentage for the Nifty over its previous close. In the percentage terms, downside tick was about 230 points. Now let us try to study our chart structure on different time frame. At first we'll try to go for a daily time frame. Daily time frame, if you people remember, we had discussed that somehow our rising channel structure is compromised and should not be considered at a higher level, or to a greater extent it is negated and should not be considered. Accordingly, if we see, middle Bollinger Band is acting as a resistance, which is nothing else but a 20 SMA. Further, if we see, somewhat a trend reversal is happening with respect to Bollinger Band. If we apply small term moving averages, then still crossover is yet to take place and it may not give us a true picture. Reason being, zigzag moves are happening with a wider range. Now if we change 100 and 200 SMA, then we can see that still 200 SMA is far and we should not consider that with a larger extent. In fact, we can see that 100 SMA acted as a resistance in last to last trading session. If we consider RSI, then RSI is again not going to give us a true and fair picture, as zigzag moves are not giving a crystal clear way for RSI to prove its importance. If we check hourly chart, then we can see that RSI crossover has again taken a place from the previous high of near to the 70 levels. RSI made a double top, but prices made a lower high. Now again, if we see overall structure, then we can consider that some support we can expect near to downside at 17,200 or near about levels for the next trading session as per this triangle kind of a structure. Now if we consider 15 minutes time frame, then a double top formation was made in the last trading session. Again, RSI is not going to prove its any importance, reason being zigzag moves and a gap down opening. If we apply 100 and 200 moving average, then we can see that again 100 and 200 moving average is not going to have any significance because of gap up gap down opening and a bit of a trending moves as well. So frankly speaking, 100 and 200 SMA is not going to prove any importance, so we shall ignore it as a whole. Now if we see option chain data, then for Nifty, max pain is at 17,400. Last close is at 17,400 near about levels. I am taking a round off value, so we can say that we have closed near to our max pain region. But if we consider option chain data, then we can see that 16,500 is having a highest OI, 17,000 is having a highest OI. Both are almost similar and a good additions were seen at 17,000 mark, which can be considered as a strong support for the next trading session. If we see call side, then good additions were seen at a 18,000, but that is not going to prove any importance as that value is 600 points far from the last close. Now if we see 17,600 has again got some additions, 17,500 again some additions. So at present, directly from 18,000 we should focus on 17,500 as that particular strike price has gone a good addition, and we shall consider 17,500 may act as a strong resistance going forward. If we consider PCR data, then PCR at present as per OI is giving a hint that somewhat downtick is practically possible. Try to understand PCR definition, it will make your work bit easy. Now as per volume if we see, then it shows a neutral stand, but overall if we consider, structure is in favor of downtick. Let us try to understand same thing via different chart structures, or you can say that a data analysis via simple Microsoft Excel. This is a data wherein we can see that a good green bars are seen. This is nothing else but a CEOI at present, which are comparatively higher in comparison to the puts. That means good build-up is seen on the CE fund, but practically that looks like a writing. Now if we see change in OI, then the smart thing that happened is 17,600 undergone a liquidation, which was nothing else but a smart people or a smart traders have exited their 17,600 put option. Reason being profit booking, genuine profit booking. Why? The reason being simple, they had carried their positions, that is 17,600 at the end of the Thursday's trading session and exited in the last trading session, so they would have booked a profit of more than 200 points or near about. I am telling near about, the reason being simple, because premium and intrinsic value both adjustments are going to happen in such a scenario. Now if we see 17,400 has undergone a huge addition in the last trading session. 17,500 also gone a huge addition. That means somehow 17,500 and 17,400 may act as a strong resistance going forward. A good additions at 17,000 mark and 17,100 is nothing else but a smart traders who booked their profit for 17,600 put option have tried to make their position at 17,000 and 17,100. We are not expecting any major downside or nifty touching 17,000 or near about levels, but somehow 17,100 to 17,200 levels cannot be ruled out on account of a volatility. Still, let us try to have one final look at our chart on the daily time frame. On the daily time frame, if we see, lower Bollinger Band is again trying to shift on the downside. So at present, in the simpler way, what we can expect is that this trend line or this structure may prove its importance. Accordingly, if we see, the levels that we can expect on the downside is near to 17,100 to 17,150 near abouts in a 1 or 2 trading sessions as a whole. Please make a note, at any given time we may have our positions as per the system trading approach, which can be on a long side or a short side, and we are trying to upload this video only for education purpose and knowledge sharing purpose. Traders are requested to understand the risk and try to act accordingly as per their understanding for trading. We are not responsible for any profit or loss made on our views shared in this video. We hope this video is going to help you to prepare your trade plan and to take a trade accordingly. See you soon with another video. Till then, stay safe, take care, bye bye.